Hey everyone, welcome back to Upside Down Data. Today I want to talk about the forecast model that I've been developing, a back test that I recently ran, and some pretty darn impressive results that came out of it. So if you hadn't seen my previous video about this model, I'm currently working on a forecasting model that can predict whether or not the price of a given crypto asset is likely to be above or below its current price. And basically what it does is it assigns a probability of that. So basically this is upside probability. How likely is it that the price, in this case of Bitcoin, will be higher 180 days from now than it is right now? So looking into the future, how likely is it that the market will be up or down? And so the way that I've gone about and set this up right now, what you're looking at is that I've trained the model to data all the way up to this yellow line. So everything before up to that is training data. So that's what the model looked at, learned from, etc. And then everything after that is test data. So you can see as I'm using basically 4.5 years of price history here of Bitcoin as testing data. So the model knows nothing about this. It doesn't know anything about what happened through here. It's making predictions based on what it learned back through here. So what you can see is it's pretty darn impressive. And this is something that I've been incredibly impressed by with this model, is that it tends to be very accurate. You know, I put out an article on our website, partydigital.io, giving some examples with some different altcoins. It was logging accuracy ratings of, 90% plus through there. And, with Bitcoin, it also does very well, just as you can see here. It gets bullish. And again, this is all test data. Bullish at the right times, and then it gets bearish at the right times, bullish at the right times, bearish all the way through this whole bear market, at the right times, etc. And then even more recently, bullish, as we've been seeing more recently, at the right time here as well. And so when you look at this, you probably expect, okay, this model seemed to perform very well through this whole test data period, but what kind of strategy could we look at to see if it's effective? Now, I think there's a lot of different ways that you could use this model that would potentially be interesting or useful potentially, or just because, it's predicting 180 days in the future, and it seems to do a pretty darn good job of identifying when trouble's ahead and getting bearish, and then also when things are getting exciting and when to get bullish. So it seems like there should be a strategy to take advantage of this. I actually want to talk about one that is very, very simple, and in fact, probably not the best way to be, thinking about a strategy with this model, but it's so simple that it's really easy to think about. And the fact that, as you'll see in a minute, it works so well gives me some additional hope with this model. The fact that such a simple strategy that isn't even necessarily likely the best way of using it can be so effective. So let's talk about what that backtest is. So essentially with this backtest, before I get into this, I'm only going to be running the backtest on this test data, right? Because it's not useful for run a backtest on training data because the model is able to fit itself to this data. So it's not going to be realistic. By only looking at test data, this is as if I created the model and started using it right here. It's as if I know nothing about the future. I'm just looking at what its output is across time. That's the benefit of doing this. So we're going to have the forecast model strategy. And as I said, this is going to be very simple. Basically, what it's going to do is that if the upside probability flips above 0.5, it's going to buy Bitcoin with all the money it has. And if the upside probability falls below 0.5, it's going to short Bitcoin with everything it has. So basically, if there's a better than chance from the model's perspective, likelihood of the market being up in 180 days, I'm going to buy it, with the hope it's going to go up. But then if that flips the other way, I'm going to short it, with the idea that the market might be going down in the next 6 months. So again, this isn't necessarily the best way of using this because again, the model is forward looking. And so you may or may not want to just immediately be buying or shorting based on a flip like that. But for the simplicity of this exercise, we're going to use this strategy. And then the comparison strategy is just going to be a buy and hold. And so that's exactly what it sounds like. You just buy X amount of Bitcoin and you just hold it. Never sell it. You just wait and see. So a couple of notes here. So both strategies are going to start with $1,000. The forecast model strategy is going to start with that $1,000 in cash and then buy it, buy in or short depending on what the market does. And then the obviously the buy and hold is just going to buy Bitcoin. So at the very beginning, it's just going to buy $1,000 worth of Bitcoin. And I should mention that this backtest accounts both for trading fees for the forecast model strategy. So basically, whenever you sell or acquire Bitcoin on exchange, you're generally speaking having to pay a trading fee. This accounts for that, so this backtest will reflect that. And then also when you're going short, it depends a little bit how you do it, but generally speaking, you have to pay some amount of interest on that short. Technically shorting, in its most basic kind of format is you're borrowing the asset and then you're immediately selling it, but you're still having to pay interest on that loan of having, borrowed the asset. You can do it different ways. Obviously perpetual futures are a thing in crypto a lot of people use, but there's also that funding rate you have to pay. Long and short, there's going to be some amount of money you generally speaking have to pay to keep a short open. This takes basically historical general kind of costs into accounts. And so, there are different ways you could do it, but is going to take into account kind of the main ways that we could think about doing that. Okay, so let's get into the results. So this is the forecast model strategy, and what you can see, the results are very impressive. So it takes $1,000 worth of Bitcoin back in September of 2018. That's when this backtest starts, and it turns it into $26,000. It basically 26x's your money. And how does that compare to buy and hold? Well, it absolutely blows it out of the water. Buy and hold would have only turned that $1,000 into about $4,100, only 4.1x on your money. So, I don't know about you, but, personally, I think a 26x is a lot more appealing than a 4x. And when you look at this, what I think is especially impressive about this is that you can see how the model is just making money hand over fist during this bear market. So while everyone was feeling extreme pain during this time, this model is actually laughing all the way to the bank. It was actually reaching new highs for the portfolio value over here, while a lot of people were down 70% on Bitcoin. Now it goes long over here, and so it did end up having to kind of eat the FTX collapse here in November. But then, as we know, that was, just a short-term thing before we went back to the upside and actually got price above the entry price for the model, where it entered somewhere around the lows back over here. So I think this is pretty impressive, right? And especially because this is a pretty simple, strategy. It's not, in my opinion, likely the optimal strategy with this model. But the fact that something so simple and in some ways so mindless can be so effective, and especially when the model can predict so effectively over 4 years without any knowledge of what happened here. People always talk so much on crypto Twitter and elsewhere about how Bitcoin is being driven by so many different things now. It's so different. What's so impressive about this model is that it was able to learn in this training set things that are still predictive today, still things that are still useful throughout this entire market cycle. It was able to play it almost perfectly. I think that's very impressive, and that just leads to these, blockbuster types of results. So, as I mentioned, I'm going to be, playing around with other strategies, see if there's a different way that you could really think about this. Because as I mentioned, this is forward-looking, and so it might not always make sense just immediately buy or immediately sell when it flips bullish or bearish, because things can happen in the meantime. 180 days is a long time in crypto. A lot of different things can happen. But the fact that it works so well here gives me a lot of confidence. And really what this tells me, more than anything else, is that this model is not a model that's just overfitting itself to training data. Because if that was the case, if it was overfitting itself to training data, it would not have been able to predict this at all. It would have predicted this horribly, and any strategy built on it would have failed miserably, and certainly would not have been crushing buy and hold like we saw. I think a lot of people underestimate how difficult it is to beat buy and hold in these markets. It's actually quite difficult. But the fact that this model is able to do it so decisively, 26xing your money versus 4x, that's a pretty marked difference, gives me a lot of confidence in the robustness of this model. And also what's important to note is that this is I think in my opinion, this is one of the most conservative backtests I could have done, because in reality, what you'd probably be doing here is, instead of just fitting the model here and letting it run, you probably actually instead be fitting the model every day and then relying on its output. Now, I have tested that. It also works well when you do that, when you fit it every day, and the output actually looks a bit cleaner, actually quite a bit cleaner than when you do it this way if you're doing it every single day. But the fact that you don't even need to do that, you can just fit it back here and it predicts so well, is very heartening. And so obviously then in the future, I'd probably be doing it, fitting it every day, to predict, whatever the upside probability the next 180 days is. But this, again, is the more conservative test, and the fact it still works so well gives me even more hope. So my main takeaways then from this video is that this model, in my opinion, is really quite something. It does not seem to just be overfitting itself to training data, and is quite predictive into the future. Even going out, 4.5 years into the future, it's doing remarkably well, in my opinion. So this is a model that I'm still developing. We're hoping to put it up on our website, polaritydigital.io, in the future. In the meantime, I would suggest you go over and check out Polarity Digital for yourself. So we have, not that forecast model up here yet, but we have our other models, which I've done my own back tests for those that you can go back and look at on the channel, which also perform quite well using different strategies. We have our UDPI, or our upside downside potential indicator risk models. We also have our trend models, the market direction classifier, trend confidence indicator, and the momentum bias indicator, each very useful in their own rights. So again, polaritydigital.io is the URL. I'll leave that in the description of this video. It's a site we put out in collaboration with Jay over Daily Crypto Analysis. Recommend you check out his site if you haven't. So that kind of wraps it up. I think this upside probability model is very promising, and I really am excited to roll it out in the future and to play with more strategies that might make those already very impressive performance even better. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about indicators and more over there. And check out polaritydigital.io.